there's something weird going on with the British economy. The numbers don't look terrible on the surface. Growth is slow, yes. Inflation is easing. But debt? Debt is quietly becoming a monster. Not just because it's high, but because of the type of debt Britain has taken on. And it's this detail that makes the UK's debt crisis potentially more dangerous than America's 37 trillion mountain. It all comes down to timing. But let me explain. For years, the UK ran relatively low debt compared to its size. In the early 2000s, the debt to GDP ratio was just 35%, manageable, healthy even. Then came the 2008 financial crash. Britain had to bail out its banks, just like the US. But unlike the US, the UK leaned hard into borrowing. And that borrowing never really stopped. Fast forward to today, and around 10% of all UK government spending, roughly $116 billion, goes just to paying interest on the debt. Not the debt itself, just the interest. In 2019, that figure was half as much and only 5%. So what changed? It's not just that Britain borrowed more, it's how they borrowed. Let's say you have a mortgage. If it's a 30-year fixed deal, your payments are predictable, manageable. You can plan. But if it's a short-term loan that needs renewing every year and interest rates suddenly spike, you're in serious trouble. That's exactly what happened to the British government. In the pandemic years of 2020 to 2022, the government needed cash, fast, but they couldn't convince investors to lock in their money for 30 years at rock-bottom interest rates. So instead, they took out short-term debt. 2-year, 3-year bonds, easy to get, hard to maintain. Because when those loans matured, interest rates had tripled. And now, Britain is being forced to refinance billions in old cheap loans at new, brutally expensive rates. Imagine maxing out one credit card, then using a second to pay off the first, then a third to pay off the second. That's the refinancing trap, and it's exactly what the UK is stuck in. This is no longer about long-term strategy. This is survival. So where does the government go from here? They have a few choices, none of them easy. Option 1, raise taxes. But how much higher can taxes realistically go without breaking working families or triggering political blowback? Option 2, print money. Let the Bank of England buy the bonds, keep borrowing, inflate the currency, kick the can. But printing money isn't free. Inflation is still sticky, and investors will notice. Confidence in the pound could evaporate overnight. There's a third option. Grow the economy fast enough to outpace the debt. But with low productivity, aging infrastructure, and cautious business investment, that's easier said than done. And in the meantime, those short-term debts keep coming due. Again and again and again. So yes, Britain still has tools, but it's cornered itself into a dangerous spot. This isn't just about spreadsheets or policy papers, it's about trust. Trust from investors, trust from citizens, trust that your government knows what it's doing. Because once that trust is gone, once the world starts seeing you not as the UK, but as just another borrower in crisis, it's very hard to earn it back. And that's the scariest part. Not just the debt, but the doubt.